Hello, friends, and welcome to my YouTube channel Simply Stocks. And today it is Sunday and it is the question answer session. So, I have a lot of queries from a lot of viewers. So, let's get started quickly. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I am not in favor or against any company that I talk about. Before I start with the question and answer session, here's a small request that kindly support me on Patreon. Once you support me on Patreon, even with the $2, that is 140 rupees per day, per month, 140 rupees per month, I'll be able to put up more videos of such kind for you, and I'll be able to research even further into the stocks and put up videos about SWOT analysis of companies and look at your portfolios also on YouTube and Patreon. So kindly go to Patreon channel. There are a lot of tiers that I have made of between $2 to $25, and you can select any one of them, and I'll help you out with any queries, anything that you have with regard to the stock market or your portfolio. I'll help you out there. Once I have 100 patrons, I made it a point that I'm going to start with an education channel in which I'll let you know with an education course as to how to invest into the stock market, how to trade, etc. And whatever knowledge I have gained over the last 8-9 years into the markets, I'm going to share with you on YouTube completely free. So I need 100 Patreons there. Currently, I have around 11 patrons. So thanks a lot for supporting me. I have gained all those patrons over the last 1 month or so, one and a half months or so. So thanks a lot. Kindly be with me, and I hope you all people also support and kindly at least subscribe so that the subscriber base increase, and I can start with a join button on YouTube, which I can only start when I'll have a 30,000 subscriber. Currently, I have less than 10,000 subscriber. So, what about this week? Well, the interesting point is the visit of President Trump to India, and what are the deals that could take place, and how would that affect some of the companies that are listed on the Indian Stock Exchange. Oh well, President Trump is going to tour India from tomorrow, I guess, and for a couple of days, and a lot of things is on the agenda for the Indian corporates, and the biggest of them all is the H1B visa issue and the defense deals that are going to come up. There is expected to be, and I'm hearing on a number of channels, news channels, that a total of $10 billion worth of defense deals are going to take place during this period, or at least they are going to discuss about such deals during this visit. And there is a request from the Indian government with respect to the H1B visa, relaxation on the norms of H1B visa, as well as relaxation on the fees of H1B visa, which has been rising over the last 4 5 years. So these are the 2 points of discussion from the Indian side, whereas the US government wants taxes slashed on some dry fruits products and fruit products for its import into India or export from US, and also want a foot into the Indian dairy and poultry business. So Indian dairy business have long been governed by India itself, and most of the times it has been very difficult for companies from US or Europe to get into that business directly, but the US government wants some share of that market as well as the poultry market, and send poultry feed, etc., or poultry products to India, or export it to India from now on. So let's see what all transpires in these 2 days. A number of companies may get affected, as you might understand. Avanti Feeds might be affected by this. A number of defense companies like BEL, BEML, HAL, etc., would be affected if the kind of deals fructify. Although it has been said that maybe the deals might not take place this time around, and to take another couple of meetings before the deal finalizes, but a lot of things would come out of it. So what is my suggestion is that kindly do not fall into the trap of doing any cute trades or looking at, say, buying BEL, BEML, or selling Avanti, or buying Avanti for that matters, of Waterbase, etc. All these companies which are related to the deals that are going to take place, or other dairy companies that are listed, because if you go to such kind of cute trades and nothing happens, you'll be stuck with those companies. So better to buy on fundamentals and on long term cases basis, rather than on news flow and whatever going to take place in 2 or 3 days time. Coming to the question answer part, so I have a lot of questions. The first one that I'm taking up is from Prakash Saha. He wants view on Fortis Healthcare. I believe Fortis Healthcare is a decent company, but whatever that has happened with the Ranbaxy case 3 4 years back, and whatever that has gone on with the kind of management issues, etc., and integrity being questioned because of whatever took place during that point of time, people are skeptical about investing into Fortis Healthcare. Probably you can look at Apollo hospitals, you can look at other diagnostic companies rather than going just for Fortis Healthcare. If there is no, you can say, uh, restriction on buying such a company, there are a lot of other companies which have a clean balance sheet and a better track record with respect to management that you can get into, even in the medical space. Ashish Shah has requested that whether I can analyze Gujarat Alkali. It is in my list, Ashish, and probably I'll do it in the next couple of weeks or so. So kindly stay tuned. There are a lot of requests about other companies as well. So I go in an order in which you would say that whenever the requests come in, first come first serve basis. So I put in to the slot and on the Excel and try to cover that up. But because of time constraints, I can do probably 4 5 videos, and money constraints, I can do around 4 videos, 5 videos on stocks on a particular company every week, and probably a couple of videos go into question answer session. So kindly be patient, and I'll have Gujarat Alkali for you as well. This is an interesting question asked by Amit. Why does it matter? And this came in through email on Simply Stock. So, how does it matter if prices go up or down for a company, as they have already sold their shares in the market? So the confusion here Amit is having is probably when the IPO comes in, the company's promoters sell whole of their share into the market, into the open market, and people or large investors have the share. But it doesn't happen like that. If that happens, then the company's promoters might not have the major share of the company, and they might not be able to sit on the board. So what happens is the company's promoters or the directors have around 100% stake before the IPO comes in, or at least 80 90% stake into the company, with around 10 15% with the you can say the PE investor, the private equity investor, having the stake. And the deal that happens normally between the private equity investor, which helps in starting the business, and the company, is that later on, at some point of time, when the business really does well, you have to come in with an IPO. So that is how it all begins. And once the company comes in with an IPO, the promoter sells part of its shares and not whole of it. So probably from 85% or 90%, the share comes down to, or the promoter stake comes down to 65%. So it sells around, say, 25% of its stake. Okay, so the promoter sells around, say, from 85% comes down to, the promoter stake comes down to around 60%, or from 90 to 60%. So the promoter sells around 30% stake into the open market. These are the number of shares that comes into the open market. From that, a lot of HNIs, a lot of institutions, a lot of, you can say, mutual funds, LIC, etc., they buy into the stake, and many retail investors buy into that 30% stake through the IPO. So the promoter still has around 60% stake into the company, and through that 60% stake, it governs whatever happens in the board meeting. So they don't sell a whole of their stake. So whenever the prices of the stock go up, because they have 60% stake, because they have 60% of the shares, then the value of those shares go up. So the promoters value go up of the amount, and from that amount, whatever they garner through the stock price jump, they can sell a little bit of stake, 0.5%, 1%, and struck deals with other companies, buy out other companies, buy out other businesses, capital, etc. And by buying such you can say assets, the value of the company grows. So you can buy stores, you can set up more stores and increase the sales, and then this continues. Or if the dividends increase, then because the company's promoter have around 60-65% stake, they give a lot of dividend, and they also get dividends out of it. So this is the formula that everything works out to be, and that is why it really matters for the company that how the stock prices work. If the stock prices really nosedive, then the value of the company goes down, the value of the promoter stake goes down, and they might not be having enough money to just help the company grow further. So take all these things into consideration while you discuss about how it matters to the promoters. I hope this really explains, Amit, as to how things work out. uh, why do you recommend only 5% exposure? How many shares should one buy? Is an interesting question from one of the viewers. So, uh, this is an interesting point, and I guess that this has been a confusion with many investors who have got into the company or got into the stock market, and they think that buying a number of shares of a particular company is better than buying less number of shares. But it doesn't matter how many shares you buy, and until the value of those shares is same. So for instance, if you buy 1 lakh worth of shares of Aisha Motors at 20,000 rupees, then you buy only 5 shares. You buy 1 lakh worth of shares of, say, Ashok Leyland at around 20 rupees, then you buy around 5,000 shares. So you might think buying 5,000 shares of Ashok Leyland better, because 0 is closer to 20, and then the stock should go up, because there's no where the stock can go further down from 20 rupees. And buying 5 shares of Aisha Motors, it will be more difficult for it to go up, because it is already at 20,000 rupees. It doesn't work like that. What happens is, and I have put up a video with respect to how to pick multi-baggers, etc., that what happens is you have to look at valuations. And when you talk about valuations, then there is a talk about a pre ratio, there's a talk about EPS growth, and debt, as to how much debt the company has, how much cash on books the company has, and how is the promoter stake, what is the dividend yield, etc. So you have to look at the valuations. Is the P very high, very low? Is the P corresponding to the kind of growth that the company is doing? And that's why I would like to start with an education channel of my own, and leave the job aside and continue with these kinds of videos, so that I can make people more aware about how to invest, and they should not get scared by buying a company like MRF at 70,000, and they should not feel happy buying something like Suzlon at 2 rupees, because there is a reason why these companies trade at these valuations, and valuations is important rather than the price per se. So there is no set formula of the number of shares that somebody can buy. Now, your second part of the question is, why do you recommend only 5% exposure? Uh, I recommend only 5% exposure in mid and small cap, and 10 to 15% exposure in larger mid caps or large caps, because if some reason something happens, like what happened with Satyam, what happened with Vakrangi, Manpasand, etc., in recent times, if something happens of that sort with any of the small caps that I discuss, because we don't know how promoters would behave later on, then you'll only lose 5% of your total stake. So if you have bought something like 12 companies, and you have 10-15% stake in the large caps and 5% in the small cap, and one small cap go bust, then you only lose 5% of your total amount, and you have 95% intact, and you can make money out of it, so that that 5% would not matter. And that's why I keep on saying about that 5% average. uh, is Avanti Feeds an avoid now? Is asked by Dr. Dilip Kumar, because it is falling. Well, no stock is an avoid or a big buy just because that it falls or goes up respectively. So you have to look at what are the fundamentals. In Avanti Feeds case, there are two or three things going not right. So the results have been good, and that is the positive thing about Avanti Feeds. But if you look at the other part, because of this US deal, there would be better, you can say, poultry stuff coming in from US if that deal gets struck. So people are aware of this fact. So that's one thing. Second thing is import into US is being taxed higher, and is going to get higher from FY21, and that's why a little bit selling that is taking place. Third thing is poultry products in India have got reduced sharply because of the coronavirus scare, and people are selling any stock that is related to whatever is happening in China, and whatever is happening in this period. So that's why poultry products are not in favor. That's what the investors think, and that's why stocks related to poultry are getting hammered. So there are two or three things not going right. So probably wait for some time, wait for the stock to settle down, wait for these news to settle down and everything, and then get into the stock. Should I buy Whirlpool or Blue Star? Both companies are magnificent, Vivek, and I believe Blue Star at this price with 37, 38 times earnings looks more attractive than Whirlpool at 50 times. But then you have to consider the business, Whirlpool's holistic business of all the white goods, etc., along with the products that have come in, with respect to the new products that they are coming in with, and the market leading thing that they have with the washing machines, and being second or third rung in ACs, etc. Whirlpool looks good even now, but any decline, say 10 to 15% in the stock, is a very good buying opportunity in Whirlpool. So you have to take that into consideration. As far as Blue Star is concerned, it is the market leader in ACs, and they are, although they are producing other products like air and water purifiers, etc. But then 80%, 90% business comes from ACs, and I believe that Blue Star itself is on a cusp of big breakout. So you might see a Whirlpool like breakout that the stock Whirlpool saw in 2015-16. From then on, it's no stopping the stock. You can have it can happen to Blue Star, and could trade at 50-55 times as well. So a 25 rupee earning, or 30 rupee earning at 50-55, could this stock could double from here. So both stocks are good. You can analyze as to which kind of stocks you like, and probably on valuations terms, Blue Star looks better at this point of time. So after this question about Whirlpool, let's see what are the other questions that have come in for me. So the next question that has come in is from Mihir, and he has asked is, can I buy HLE glass after the Q3 numbers has been good and the PE of the company has gone down? Well, an interesting company, HLE glass, and I put up this video about a few weeks back about this company, and this is into glass molding, etc. And I believe that it's a very good company, but one needs to have an understanding as to the kind of valuations that the stock is trading at. So probably wait for a further decline about at least 15% from here, and then get into the stock. I have put up that video, and have mentioned about the support levels for the stock. So kindly wait for those levels to come in. Even with very good results, the stock could correct because people are having an understanding of the valuation. That's why the stock has run up. So don't buy expensive. I mean, don't buy very good stocks at expensive valuations. That also hurts. So wait for valuations to stabilize, at least become reasonable. So any 10 to 12% decline further from these levels would be good for you to buy into HLE glass. Nagarajan has asked that should I invest in FL India? Interesting. So I'm going to come up with a video on FL India next weekend because there have been at least 15 to 20 requests about FL India, and I have done some research into the company as to what the company does, etc. And I believe, in a nutshell, it is a very good company, but again at expensive valuations. So trading at around 111 times current earnings, 90 times FY20 earnings, and 75 times FY21 earnings. The stock is extremely expensive. It could go up further, but don't get into this trap, because if these kind of stocks fall like DMart, FL, etc., then you are going to get stuck for a long time, 2 3 4 years, and you might not get your price. So don't fall into this trap. It looks very fancy at this point of time to buy into such companies, but things change very quickly, so avoid at these levels. Kumar Isa has requested for a video on Ambika Cotton. Surely a video on Ambika Cotton would be coming in the next 10 12 days or so. So uh, kindly be patient about it. Bhagat Singh has asked whether Bata is better than Relaxo, and Bata and Relaxo is better than Mirza International. So this is a question from Bharat Singh. Yes, Bata and Relaxo on pedigree basis is better than Mirza, but you have to take valuations into consideration. The valuations of Bata is very rich compared to Mirza. I won't say expensive, but very rich compared to Mirza International, and same with Relaxo after the run up. And that's why I suggested Mirza International, that the kind of business that they are into, they should not be trading at 14 15 16 times earnings. Should be Mirza should be trading at 30 35 times earnings minimum, not 50 times, but at least 30 35 times. And that's why I suggested buying into Mirza International. Okay, so Buddha Datta has asked as to my view on C8 and Galaxy surfactants. Very good companies, Galaxy surfactants into coloring, etc., and other dyes and pigments, and you would say other kind of, you can say, chemical products. C8 is a good company, but I am not aware of the tire prices at the moment and whether they are on the boil or going down. Based on those, make your decision on to whether to buy into C8 or not, because on the other front, the other factor that drives tire stocks are buying into automobiles, and automobile business is not doing that well. So buying into C8 because of that reason might not be very prudent. So you have to take that into consideration. But if the tire prices, if the rubber prices, I'm sorry, is going down, I'm not aware of the rubber prices at the moment. If they are going down sharply, then yes, get into C8. uh, Make video on Black Rose Industries, asked Diva. So yes, surely over the next few weeks I'll make that video. Although the next 2 weeks are completely covered with the videos that have been requested earlier by my viewers. So I'll definitely make a video on Black Rose Industry. Kindly subscribe to my channel and stay with my channel, and you'll definitely get a video on this. And similar answer is for Gokul on Apollo tricord tubes. I'll definitely make a video in the coming weeks and analyze the company and give you a view on Apollo tricord in a few weeks. So other questions that have come in from viewers: the view on Aisha Motors and Bajaj Finserv, asked Tapan Datta. So in my opinion, Aisha Motors is reasonably priced at the moment, and you can start buying into Aisha Motors for the next year or so and buy as an SIP, and I believe by 2022 things would be really good on the auto front. And there's always a lull of 2 to 3 years in the auto industry, and then a very good period of 6 to 7 years. So this is the time to buy into Aisha Motors on any declines, but wait for at least 15-18 months for things to really revive. As far as Bajaj FinServ is concerned, as with Bajaj Finance, the stock is extremely richly valued. Wait for declines. I made videos on Bajaj FinServ as well as to which are the right levels to buy into. Kindly go through that video and buy on major declines such companies. Okay, so Debashish has asked about a video on Sumitomo Chemicals and its merger with Excel Cropchem. I need to analyze this merger along with the Motherson Sumi demerger that is taking place, and I'm going to put up a video on both of them. I have it in my list, so wait for a while and you'll get a video on this as well. Carol Sony has asked about my view on futures of SBI Life, ICICI Lombard, and HDFC Life. All three are very good companies for long term, and by long term, I mean 10-15 years. It would be a very good investment, and even with the changes that the government have made with respect to investments and with respect to 80cc in the tax slab, etc. I believe over the next 10 to 15 years, life insurance and normal insurance would be a big theme in the market. Okay, so Kanav has asked that whether I can analyze Uflex. I'll definitely make a video on Uflex in the coming days, Kanav, so stay connected. Again, Sumit has asked Bata versus Relaxo, VIP versus Supreme. So this is not about whether Bata is better than Mirza International. This is in regard to or with respect to each other in the same industry. So Bata, yes, better than Relaxo anytime, but then valuations you have to take in mind. In this case, Relaxo's valuations has also run up, so better to buy Bata on any major declines, wait for declines and get into it, or probably do an SIP. As far as VIP and Supreme Industry is concerned, I believe that VIP with its business, the kind of business that it is going into, and the kind of numbers that it is showing is on a higher trajectory. But then the pedigree of Supreme Industries in the plastic business is extremely good. I like Supreme Industry personally, but do a thorough research on both of them. There's not much to look and there's not much difference between the two if you get into the stocks. But Supreme Industry for me has come up with very good return ratios and profitability numbers over the last 4 5 years. And yes, it has run up a bit, probably on declines. You can invest into it as an SIP. So this was my video on the question answer session for this week. Please like and subscribe my channel, hit the bell icon so that you get my videos straight away when I post it. Thanks a lot for watching.